Good morning et bienvenue. I'm Joanne Jobin, your Vid Media host, and welcome to another Vid Town Hall Forum. Today, I'm really excited to be here once again with Radisson Mining Resources. Joining us this morning is CEO Matt Manson, who's here to provide an update and recent news on the company. After the presentation, I will moderate the submitted questions. Please submit your questions to the Q&A tab at the top of your screens. I will then publish them and you will be able to vote them up or down in terms of what you deem most important. So without further ado, I'll now turn the meeting over to Matt. Matt, the stage is yours.
Thanks, Joanne. Thanks everybody for joining us today. So I'm going to take you through about half an hour here of Radisson and the O'Brien gold project in Quebec's Abitibi. We just had some exciting news this week. We put out some pretty spectacular assays on Monday, which I'll show you and give you some of the context for it. But I also want to talk about where we think Radisson as a project is going and where we think it's going geologically and where we think it's going in terms of a future mining scenario. So let's get into this. I'll take you through the regular cautionary language. So, here's the headline story for Radisson. It's the old O'Brien mine that we're exploring. Famous for being one of the richest gold mines by grade in Quebec. It ran from the 1920s to the 1950s. There's a photograph of it. Currently, we have about 1 million ounces of new resources of the project, which is still growing. There's a drill program ongoing, 35,000 meters this year, which is just coming to an end, and then we're funded for a drill program next year as well, which we'll be talking about relatively shortly. We've also got an eye here as a relatively new team. Radisson's been around for several years, but we're talking here about we're talking here about a development scenario as well with an MOU that we announced at the beginning of September with IAMGOLD around assessing the Doyen mill as a destination for our ore in terms of metallurgy, in terms of flow sheet. Now, one of the things that O'Brien was very famous for were samples like that on the left, museum quality visible gold samples, and many of these are actually in the collection of the Royal Ontario Museum in Toronto. Now, the news of this week was this. This is a very spectacular intercept of 1.3 kilograms per ton of gold. We've got a video here that's actually taken from the core shack as that core was being brought in. It's a 2 meter interval of mineralization, averaging about 640 grams over the 2 meters. But really, the 1.3 kilogram 1 meter section is where it all is. And there's a nugget sitting at the end of the core, gives you a sense of what that meter is like. That's pretty representative of the whole intercept. So this isn't a one-off. This is actually what O'Brien was known for. It was known for these very, very high grade museum quality intercepts, and we think we found the specific stope with this drill hole where that came from, where those museum quality samples came from. So we hope to do this again is the message, and I'll show you where we think that zone is in a few slides here. Okay, so before we get to that, just give you a quick summary as to who we are. Again, it's a relatively new team here. Through the spring and into the summer, there was a bit of a reformulation of the board. I came on as the new CEO at the beginning of July. And I have a history, a background, if you don't know me, in mine development principally. I've done 3 large standalone projects in my career. Pierre Baudouin, many of you will know as the person that built the Detour gold mine, Canada's largest gold mine. Previously, and more recently, the Chief Operating Officer of Silvercrest and on the board of Silvercrest, now being acquired by Coeur. Michael Chantilly, many of you know, well-known investor. He's a large shareholder, about 6-7%. Lee Chenard, Cindy Valence, also 2 recent appointees to the board, coming with a technical background, IAMGOLD and Barrick in Lisa's case, and with Cindy an ESG and CSR background in well-known Quebec mining. Jeff Swinoga has been on the board for a few years. Many of you will know him. And Peter McPhail, a new name, a new face also, previously the Chief Operating Officer of Alamos, and also the chairperson of Marathon Gold, where I was previously CEO. I think on this board, we have about 8 or 9 mine builds between us. So it's a really crackerjack blue chip board, and it's with the view to where we think Radisson is going as a company rather than necessarily where it is right now. So let's talk about location. This is the Abitibi. There's the Cadillac, Lardon Lake Break, where Radisson's O'Brien project is just outside the town of Cadillac. And the history of mining in the Abitibi is one of hub and spoke. Mills that have been going for quite a long time, with successive ore bodies brought through those mills and processed that way. The red areas are indicating the existing hub and spoke operations that are around the O'Brien project. There's the Sigma Lamaque complex with El Dorado. There's La Ronde, which processed La Ronde mine, and also more recently, of course, the Lapa deposit, which was the most recent deposit to be developed in this area, and then Doyen Westwood, which is processed at the Doyen mill, the Doyen mine, the Musca mine, and then most recently Westwood. So, here's the punchline for how we see the development of O'Brien. We don't see it as a standalone project. We see it as ore supply for one of these mills within one of these hub and spoke operations. The 5 mills with 4 companies that we think are candidates within the region within a reasonable trucking distance. And the one that this MOU that we have with Iron Gold is focusing us on is the Doyen mill, which is 21 kilometers to the west of us, 15 minutes drive on Highway 117. So the next few slides are going to be developing 2 big themes for this project. One theme is location and proximity of infrastructure and other mines and mills around us. The second theme is going to be how much upside potential we think there is in this project at depth. The third theme in this presentation is going to be, eye-watering upside in grade, such as we've just published this week, and we'll be talking about that. But here, the next few slides are going to be location and upside at depth. Okay, so location, you can't beat this. This is looking to the northwest. That's what the O'Brien mine currently looks like. The mill building is still there. A couple of other buildings still there. There's the tailings facility now reclaimed. There's La Ronde on the horizon, and with Nicoego, and just beyond that, Doyen Westwood's mine. Beyond that, head frames on the horizon here. You're seeing the Pena shaft, you're seeing Busquet, you're seeing Westwood as you go through there. There's the Hydro-Quebec power line, there's Highway 117, and Cadillac, the town of Cadillac is just off to the west. Can't beat this for location. And if you actually now look at the location in geological terms, you see the abundance of gold mineralization in this part of the world. So there's a number of different long sections here showing you the major deposits just in our immediate neighborhood, from Doyen Westwood in the west, through La Ronde, through O'Brien in the center, going out to the east and eventually ending up at the Lapa deposit. And if you go further, you get into Malartic and you get into the Val d'Or camp. So again, 2 things to take away from this. How close everything is, and then if you look at how deep the resources go here, O'Brien is really a shallow deposit. There's the original mine in the center, there's the new resources just to the right hand side of the old mine, and you see how deep some of these other deposits have gone. Doyen is down to La Ronde is down to 3.5 kilometers at this stage, and Lapa, the deposit which I mentioned is the most recently developed in the area, that's really our analog, that's our precedent deposit. Similar geological setting to O'Brien, similar metallurgy, similar grades. Did about 100,000 ounces a year for 8 years on the basis that the ore was trucked from there past us to the La Ronde mill where it was processed. That is the analog and the precedent deal that we are looking at, that type of arrangement, a very efficient way to develop a new deposit. And we're looking at it because O'Brien at this stage, in terms of the resource that we have currently, has passed that line, that scale line that Lapa was when it got the green light. So if you zoom in on what O'Brien and the new resource looks like, that's what it looks like. There's the old mine in the center. There's the new resource in yellow. That's about 260,000 meters of drilling. That's the resource statement as of March of 2023 done by SLR. So all of the drilling from this year is not yet included in any of these numbers. So that's about 1 million ounces, half of which is indicated, half of which is inferred. 10 grams per ton indicated grade, 8.5 grams per ton inferred grade, averaging about 9 grams per ton. And really the message here is, where is it? Well, it's all still pretty close to the surface. For an area where deposits go down to 2 and deeper kilometers, 75% of that resource is in the top 600 meters. 100% of it is down to 900 meters. And we believe 2 kilometers for this type of deposit is the exploration horizon. And so we're open below that. Now, the next set of slides, hopefully this will animate. I'm just going to check it does. It doesn't. We're going to have something online on our website that actually takes you through a sequence of animation slides here, and this portal is not quite doing it the right way. But this is a satellite view of the O'Brien project in relation to La Ronde and Westwood, and we have quite significant scale potential here. You'll see that Radisson is down here just north of Cadillac, and I'm going to show you in a few slides time the long section of what Radisson looks like in the context of this location. Before I get to that, I'll just talk about the jewelry box hits that we had this week. There is the old mine, and you'll see that there is a pencil-shaped stope that we call the jewelry box stope, probably only a few meters wide. But why would you mine something of that shape? It was because it was the source, we believe, of some of these spectacular samples. It ran for 500 meters of vertical extent, from 250 meters down to 750 meters. It got lost above 250 meters. The original miners back in the 50s couldn't find it, so it wasn't discovered between surface and 250 meters. And we went drilling for it. We targeted this area. We started drilling just to the east of the projection of the original stope, and we hit that 1.3 kilograms per ton within a 2 meter mineralized zone. Was us going through that zone, we believe. And now that we have that intercept, we can try and target it with additional drilling. We hit it at about 200 meters vertical depth. We think it probably goes to the surface. So we're going to trace it with additional drilling to take it up to the surface, and we're going to look for the surface. We're going to strip for the surface. You can imagine how spectacular that would be if we find something like that at surface that you can step on. So when we actually discovered this, it was the drillers at the drill rig who called us up in the middle of the night and said, we're looking at a core here that's full of gold. It's 1.3 kilograms per ton is, I think, the record in my career for grade on any hits. It's really spectacular. It's 43 ounces per ton gold. And again, there's a geological explanation for this. There's a mining heritage for this type of thing. So this isn't coming out of nowhere. This is illustrative of one of the attributes of the O'Brien project, which is, very localized, exceptional, eye-watering grades. So I think we're telling a story here of deep drilling going forward and resource expansion and development. But I think this has opened people's eyes to this famous attribute of the mine, which is the ability to produce this type of very, very rich mining zones. And we hope to see more of that. And we're gonna go for more of that. Okay, so I want to talk a little bit now about some of the development attributes of this project. And firstly, let's talk a little bit about this MOU that we have with IAMGOLD. So again, we don't see this as a standalone project. We think that the ore will go to somebody else's mill. The Doyen mill is one that's an obvious candidate for us. It's been IAMGOLD's stated intention to find additional ore supplies for the Westwood project and the Doyen mill. And They put out a new 43-101 report on Westwood, which looks very encouraging for the future of that project. And again, stated intention at that time to find additional sources of ore. It's our stated intention to find a mill for our ore. So this is a natural thing that should be happening right now. It's a non-binding, non-exclusive association right now. It's an MOU to facilitate the technical work to make sure our ore is compatible with their mill. So this is non-trivial. This is metallurgical work. It's flow sheet work. We ought to give some guidance at the beginning of the new year as to how this is how this is going. But the short answer is it's going very well. We see lots of opportunity here with and a variety of different processing scenarios where our ore will successfully go through that mill. So I think we expect to give some more detailed metallurgical and flow sheet guidance at the beginning of the year. But at this stage, no red flags to this idea. Now, we're not talking about any commercial arrangement with IAMGOLD at this stage. Our MOU and our disclosure is silent on that, and we're focused right now on the technical attributes of this, but so far so good. Now, the geology of this deposit is important to understand when you're thinking about resource upside, and when you're thinking about very high grade intercepts, and when you're thinking about as well continuity. This is a narrow vein, high grade deposit. So continuity of mineralization, continuity of grade is really important for a successful mining operation. So, before you can assess continuity, you have to understand the geology and have a good deposit model. So this is a very well-known deposit type, high grade, quartz sulfide veining within the Cadillac Lower Lake Break, hosted by the Pichet rocks, which are a sequence of metavolcanic, metasedimentary, and intrusive rocks that are packaged against the Cadillac Lower Lake fault and in juxtaposition against the Cadillac sediments to the north and the Pontiac sediments to the south. So that's the quick geology. And these veins that you see in red there are continuous as demonstrated in the mapping from the old mine. So we have the benefit of having the old mine there, very well mapped. These veins were traced over hundreds of meters, we've been able to build a very rigorous vein model on the new drilling, which constrains our resource. And as the new guy coming in, it was important to me that this work had been done well, and the company had done this work very well. Again, all informed by the experience of mining and the voluminous data that's available from the old mine. So let's talk about that being understood. Let's talk about where this deposit is going. We've got east-west veins, but if you look at the stopes in the old mine, and if you look at the new resource, you see this verticality in where they mined and how the new resource is being pulled down. So why is that? Well, what we're seeing is here that there are, within this sequence of lateral veins, there are areas of grade chutes where you're getting your best grades and your best tonnages. And if I just go back one slide, you'll see that horizontal mapping level in the old mine, which is shown in the top right, that's the mapping in the top right of that horizontal slice from the old mine. You see that the biggest stope in that old mine, if you can see my cursor, maybe you can, was on the right-hand side of that level, which actually is developed upon an area of multiple veins where you've got vein intersections and veins coalescing. So you've got more thickness, and you've also got more grade in these areas. And so these areas form vertical grade chutes, and which the old miners were following down. So if you see how our new resource naturally develops, it is picking out, just empirically, just in terms of where's the grade and how you model it, it's picking out these trends going down on that same kind of easterly plunging orientation as well. So what you're seeing here in the drilling is 3 drill holes that we put out on September 24th that were targeting the down plunge extension of one of these new grade trends that we call Trend 1. And we hit about 170 meters below the base of our existing resource. We hit, including about 27 grams over 6 meters, right? Quite significant grades. 2 of the 3 holes hit, and that's telling us where this this plunge is going. The next drill hole that we intend to press release is a hole that's actually targeting beneath the old mine for the first time. We've never drilled below the old mine. We put a hole down that went to 1,700 meters. So that's off the bottom of that particular section they're showing. And it came through at about 1,500 meters depth below the old mine, vertically, but at 1,500 meters depth, and went through Pichet rocks. So we know the geology is continuing that depth. No reason to believe that the mineralization isn't continuing to that depth, and we'll be publishing the assay results of that hole relatively shortly when we have them available. The implications of what we're doing here are we are pushing this deposit down to its natural exploration horizon of 2 kilometers pretty diligently and with great success, as you can see from that drilling there. We think that the exploration target for this deposit is 3 million ounces. If the old mine continues down with its attributes that it currently shows, if the main trends of our deposit, which we would call right now trends 0, 1, and 2, that's where most of our mineralization is. If those continue into 2 kilometers, that's 3 million ounces. That's our, as explorationists, that's our target in this deposit. It'll take a lot of drilling to get there, but the deep drilling that we're doing right now is chasing that type of upside and giving directionally a pointer as to where we think this deposit is going. This is mesothermal gold. These types of deposits do go that deep, and there's nothing geologically to indicate that that's not happening here. And when you drill 170 meters below the base of your resource and you're getting 27 grams over 6 meters, that's telling you that that's where you need to go for additional resources, and that's the plan here. So we're very excited about where this project is going in that regard. And when you look at continuity for this deposit, the mineralization in cross section, you get this, right? That is a cross section through that trend 1, where we had that deep hole 170 meters below the base of the resource that gave us 27 grams over 6 meters. And you can see the amount of continuity you have at higher elevations here, where you've got more drilling. So the deeper you go down, the thinner the drilling gets, obviously. But the colors there are different grade cutoffs. So the bottom cutoff, the bottom color, the yellow color, is a 3 gram cutoff. Our resource used a 4.5 gram cutoff. I think in this current gold price environment, you would use something like a 3 gram cutoff. That would be more typical for a deposit like this. And you see how much resource you're getting at a 3 gram cutoff and how much continuity there's there in the mineralization. And again, the bottom of our existing resource was a hole that gave us about an ounce of gold over 3 meters. And then, the next hole down was 170 meters and it gave us almost an ounce of gold over 6 meters. So in the same geological unit, P-shaped porphyry rocks. So this is holding together very well as a mineable deposit. And when we're thinking about mining this deposit also, we've got to think about metallurgy. Again, we expect to put out some detailed guidance at the beginning of the new year on the metallurgy of this deposit. But I can talk in general terms as to what we see when you look at the type of gold intercepts we get. So this is actually a slide that summarizes some of the high-grade hits we've had in 3 recent press releases: August 14th, September 24th, October 30th. And you're seeing the same pattern. You're seeing broad zones of mineralization, where you're getting above cutoff grades, and then you tend to get a zone in the middle where you've got tons of VG, and you're getting something north of 100 grams, typically over a meter, very, very typically. So that's the characteristic of the deposit. And if you look at what we see a lot of free gold, a lot of VG. So we'd expect to get over 50% recovery after gravity for this type of ore. And then you're seeing a sulfide association, and it's pyrite and arsenopyrite. And so the metallurgical work we're doing right now is looking at what's the best flow sheet to make the final recoveries. Our resource assumes an 85% recovery. We think something over 90 here is more suitable for this type of mineralogy and metallurgy. And again, We would expect that to be something using flotation, and then a leach after flotation. That's likely going to be the base case flow sheet here. That is how the La Ronde mill was set up to process the Lapa ore, which again was the similar analog to what we see here. And of course, Doyen mill has got a flotation circuit, unused and needing to be rehabilitated, but it exists. And that's one of the things that's interesting for us with that Doyen mill, the ability to bring that back to process this ore. But at this stage, we see opportunity here rather than challenge. And again, I think the metallurgical guidance and flow sheet guidance that we expect to put out in New Year should be of interest to people. So just to wrap this up, we've got multiple rigs on site right now, finishing the 35,000 meter program from this year. We raised $7 million back in October, and that's fully funding our exploration for next year. And we're going to be targeting the deep expansion of this project, and also looking at the jewelry box as well. And I think that's something people are very interested in, and following that, bringing that up over that 250 meter section up to the surface. At the same time, we're thinking about development. We're thinking about the technical assessment with Doyen. We're thinking smartly about development here again, and I stress, we don't see this as a standalone project. We don't see ourselves building a mill, building a tailings facility. We don't even see ourselves building a camp or maintenance facilities at surface. We've got the facilities in town locally to handle that. This is purely an underground mining equipment, surface water treatment for mine water, and trucking of ore. That's how we see this project. Very, very lean, efficient, and I think high value. If this work with Doyen and IAMGOLD is successful, we've said that that will trigger a preliminary economic assessment for this project. That will be the first one ever done. And some prep work for that is already ongoing. And of course, we are now thinking about environmental studies, permitting, and community engagement, and the professional work that is required behind modern mine development. And I think in terms of the capital structure of this company, about 100 million market cap right now, not overvalued for what we see in this project. The target is 3 million ounces here, very high value, high grade ounces right now. All the benefits of not having to build your own mill and tailings facility are hopefully going to be evident when we can put some valuations around what we've got here. At the end of October, about 13 million in cash. We'll finish the year with a very strong cash balance, which will set us up well for next year. And in terms of the share ownership, management and insiders about 9%. I bought about 3 million shares on the markets and in our recent financing since I came on as CEO. And what we always talk about is the 34 that own 34%. There's a series of high net worth individuals in the Abitibi and Rwanda principally who own about 34% of the company. These are people who have been invested for a long time. They're very important to us. They are very supportive of what we're doing, and they are sophisticated investors, people who are working in the mining industry and who see the value in the O'Brien project. And Joanne, I think that's everything from me. Thank you.
Excellent. Thank you so much, Matt. That was a great update for our audience. Those results and core samples are absolutely spectacular, by the way. I mean, museum quality indeed. So we do have some questions. So we're going to, with the first question is, what are some of the anomalous deposits that compare to what you're seeing now?
Well, I mean, as I said, Lapa is the obvious one, right? So it was narrow, high grade quartz sulfide, gold and quartz sulfide veins. Had a same metallurgy, pyrite, arsenal pyrite association, similar mining widths, similar depth, and mined at a similar mining rate, and achieved a similar production profile, and was processed, at an existing mill. So that's an almost, perfect analog, right? But there's been a long history of mining, narrow high-grade deposits of this type in the Pichet rocks in the Cadillac Laurel Lake break. I mean, there's been a lot of them. So plenty of analogs to go by here. It's a very well-known deposit type.
Excellent. And I realize that you may have gone over some of these questions in your presentation, but we're still getting these questions asked. So sometimes I take the questions and I reformulate them a little bit, but bear with us. What is the current status of the milling assessment for IAMGOLD's Doyen Mill, and what are the next steps?
Yeah, so we're represented by Ausenco in this work, and the IAMGOLD team has been very open and engaged with us, the Westwood team, as we do this work. So we've been doing quite a comprehensive program of metallurgy with our samples at SGS Lakefield, Ontario. And we have been assessing the current operation of the Doyen Mill and its current flow sheet, and what would be required to have our ore go through there on a complementary basis with the existing Westwood mine plan, and what modifications would be required to the Doyen Mill to facilitate that. So again, it's gone very well. We're very thankful for the very positive engagement that we've had from IAMGOLD as we do this. Again, it's very compatible with what they've said they want to achieve for Westwood Doyen, which is the processing of additional ore, and it's very consistent with what we're trying to achieve. So we're coming to the point where we have some conclusions and some results. And again, we would hope to give some guidance on that beginning in the new year. It's a very collaborative process with IAMGOLD. We are under the terms of the MOU. We share everything with them, and we get consensus with IAMGOLD on the feasibility of what we're trying to do. So when we do put guidance out and results, it'll be on the basis of agreement between the two counterparties here on the technical conclusions. But yeah, it's going very well.
Excellent. The next question concerns your PEA. I know you talked about triggering the PEA. Maybe you can expound on that a little bit more for the audience.
Yeah, so we've never published an economic study in this project, and the resource that we have from March of 23 is a good resource, and half indicated, half inferred. And again, we're more or less at the scale that Lapa was at when it was developed. So it does allow us to put out a preliminary economic assessment as to what that type of operation would look like. And we've said previously we think it's 1,000 ton a day and is an 80 to 100,000 ounce a year type producer. And right now we probably have an 8 to 10 year kind of mine life on that basis. So what we don't want to do is put out a what if PEA on milling, right? Number one, we don't want to build our own mill and tailings facility, and we don't want to put out a what if we did this or what if we did that type PEA. We want to have some clarity on what the processing and tailings deposition scenario is going to be if we're not going to build our own. So I think that's, putting everything in its right order. The first thing is to work out the technical viability of using the Doyen Mill, and mine plan viability. That's a given, since Doyen has more capacity than Westwood itself can supply. There's a couple of satellite deposits that can supply lower grade ore to Grand Duke, for example, right now is doing that into that mill. But we need to get some clarity on that and the feasibility of that before we put anything out at our end on with the PEA. So that's I think the correct sequence of events. But I think we've reached a stage of this project where, after many years of exploration, where you can actually, see a mining scenario. You can see the viability of that, and that'll be an important value statement for the project when that comes out. Again, it's an if still rather than a when, because what we've said publicly is it'll be triggered by the successful conclusion of the work with IM Gold. So that'll be the starting horn for doing that PEA. But as I said, so far so good.
Excellent. And while we're on the subject of milling in the area, one of the questions that I've been getting again and again is, which of these mills have actual excess capacity? Is it all of them? You talked about one of the mills having a lower grade capacity. Obviously, your ore is going to be very high grade. So where does that actually leave you in terms of optionality?
Well, again, they're all slightly different, and whether a mill has capacity is also specific to how you intend to process the ore. So what I mean by that is, if you intend to take a deposit like ours through a flotation circuit and then sell the concentrate rather than leach the concentrate on site, which is an option that many companies consider for ore like ours. You're selling your flotation concentrate to a smelter and doing recovery there rather than actually putting it through a leach process and doing recovery on site. That removes the leach tanks as the bottleneck on the project. So there's an example of decision making and processing. It influences the context of that question: is there room in the mill? Very simply, the Doyen is an obvious mill of interest to us because it's 3,000 tons a day. That's its capacity, and Westwood is supplying up to 1,000 tons a day into it. So there's capacity there in the foreseeable future. Some of the other mills, though, also have that sort of capacity, and so we like to talk about Doyen because that's the one we're public on with the MOU, and that's the one we're focusing our work on. But there's other processing opportunities we think as well, where something of our volume, 1,000 tons a day, isn't huge. There's some opportunity elsewhere as well, we think. But again, we're very focused on Doyen, and Doyen is the obvious one for us, given its capacity and given its proximity to the project.
Right. Okay. Our next question, and if I had a crystal ball, of course, you've built a few mines, so maybe you have a much better outlook on this one. How large do you expect O'Brien to ultimately be, and how far down or deep do you really expect it to go or to be?
I think we expect it to be. We expect it to be down as far as 2 kilometers. I don't see anything geologically limiting at this stage. Again, we're soon going to be publishing the results of the deepest drill hole ever in the project, and I think that's going to be very important to us. When those results are ready to put out, as to how far this thing might be going. So it's 2 kilometers. I mean, I think, and that's a somewhat arbitrary line because we're just thinking, well, given the mining widths and the volumes and the amount of development and the grade and the production profile, what is a back of the envelope sort of economic cutoff line? That's probably 2 kilometers. Back in the 50s, the economic cutoff line was 1 kilometer. They didn't stop because they ran out of ore. They stopped because gold was fixed like $35 an ounce, and that was the limit economically of how far they could go at the time. So 2 kilometers. And I think, look, this is a narrow vein, high grade deposit, right? You can't build them too big, right? When you're doing mine development, and you're exploring an ore body, you define an ore body, the first thing you settle on when you're starting the study stage, you're thinking about mining, is what is the natural mining rate of that deposit, right? Do you have a narrow vein, high grade thing? Do you have a big, porphyry that's going to be a block cave? Is this open pits? And that tells you what the mining rate is going to be for that deposit, and then that tells you what size of mill you're going to have and what your production profile per year is going to be. So This type of deposit is naturally 1,000, 1,200 tons a day, right? If you try and go too big, you're going to have problems. You're going to fall behind on mine development. You're maybe even going to have some. You're going to run into problems. There's plenty of deposits like this that have run into problems by trying to go too big, or also trying to sort of leap, trying to substitute, bootlace your way up here by starting small and trying to kind of lever it up. Fix on the appropriate mining rate for the deposit and build it that way from the beginning and stick with that, I think is the message. So this is 1,000 to 1,200 tons a day. And the kind of grades we're looking at, that's going to be 80 to 100,000 ounces a year type targets for this type of deposit. Very high margin ounces if we're not, and with low capex profile for not building the mill and the tailings facility.
Yeah, keeping the dilution down, obviously. Okay, final question, and then we're at the top of the hour and we'll wrap it up. This has to do with your recent MOU with IAMGOLD. Are there any standstill terms or equity restrictions for IAMGOLD as per the agreement? Is there anything precluding the company from acquiring you, for example, beyond the MOU stage? Now, obviously, some of this might not be for public consumption, but maybe you can answer whatever you can.
Fully for public consumption. I think we said on September 9th when we published the MOU that there's no commercial terms here at all. So it's non-binding, it's non-exclusive. We said that in our disclosure. We are simply working collaboratively with IAMGOLD on the technical criteria for this. It doesn't contemplate any commercial terms for how our ore would go to that mill. It doesn't talk about toll milling or joint venturing, or it's absolutely silent on all of that. It's just a technical collaboration MOU. We and IAMGOLD are free agents here, able to do whatever we want to do. This is purely a prerequisite technical evaluation before we start talking about something else potentially, right? So that's what this is. Yeah,
kind of a kick the tires agreement, but it's a great one. And IAMGOLD, I mean, you couldn't get any better than that, and specifically with them being in the area as well. That's fantastic. All right. Well, we are at the top of the hour. And Matt, I do want to thank you for a fantastic presentation and sharing those fantastic results with us. As you know, you will be at the mining investment event in Quebec City, and we hope you're going to bring some of that fabulous core to show off at the conference next year. In the meantime, thank you to our audience. That was a fantastic update. And Matt, again, thank you for your time today. The presentation will be available on the Radisson website and, of course, across all of our VID social platforms. Matt, before we sign off, do you have a few words you'd like to say to your investor audience?
No, I think in the middle of that presentation, there was a sequence of slides that weren't animating quite the way I wanted them to. So when we publish this online, we'll actually do something about that, and we'll show you that sequence, because it kind of takes you underground and it shows you the resource underneath the surface and where drilling is happening. So apologize for the bit of the stumble there in terms of the flow of the slides. And maybe we're being a bit ambitious there on that one. But when you see this online, we'll have that fixed up, and you'll get the sense of that. But thanks for joining us.
Thank you. And before we sign off, if everyone could please ensure that you fill in the quick questionnaire at the end of today's presentation. This really helps the company and us communicate more effectively with you for future events. So thank you and merci to everyone for tuning in. We look forward to seeing you on the next Town Hall Forum. Bye-bye, everyone.